Hello and welcome to this live Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have Falasca talking to the brokers. We have Mike Baudendistel with his second appearance with a shipper update, but first we're going to go to Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. I'm Strickland, and something we've been tracking for the last couple of months is the difference between reefer volatility and dry van volatility in the freight market overall. I've got the outbound tender rejection index put up for both van and reefer right here. So the green line represents the reefer rejection rate for the United States. You can see it's significantly more volatile than the dry van sector, which is not terribly unusual. About 15% of the overall freight market is what the reefer van or the reefer segment represents. Down here, much more stable dry van line here as tender rejection rates really kind of bottomed out in August, about 3.7% earlier or later in 2019, and then peaked out this Christmas around 14.2%. Ever since, we've been on a pretty big free fall on the dry van sector. Reefer has actually had a little bit more of a bumpy ride coming down out of the holiday peak season. So we have been thinking that this is a little bit unusual this time of year. There is some seasonality involved with reefer in January, but to see this big bump right here, right after the holiday so quick is a little bit unusual. But now we're starting to really decline back down into where we think it should be traditionally. So again, reefer not really thought of as this big, robust segment in the winter, but it is. It actually is a season for the reefer segment because you have a lot of temperature-controlled freight moving through the United States. So looking at the volumes, now the volumes paint a pretty interesting story in my opinion. So you have the dry van outbound tender volume index here with the blue line represented, the mountain underneath it, and then the reefer outbound tender volume index in the orange here. So reefer, you can see reefer volume, reefer demand really shot up in November, December, really kept itself high in January, whereas the van segment really didn't have, I mean, it had another peak, but not quite the peak that the reefer segment had. So again, this Christmas really was driven a lot by reefer demand in terms of overall market volatility, where the dry van side didn't quite achieve its full potential as it peaked out here in September this year, or this past year. So what does that mean for the market overall? Well, looking at our weighted rejection index map here, we've got, I've got a little bit of information coming at you, a lot of information coming at you on this one because I've got some weather overlay on it today. But anything in blue, again, the market itself, weighted rejection rates at top are around three value, whereas the bottom is sitting down here around -6, -7 in terms of overall weighted rejection. And like I've said before, you really want to look at anything above 5 or below -5 to see any significant volatility in the market. That 3 value isn't really going to create a lot of spot market activity. But across the country, you've got some of these Midwestern markets. Again, as some of this weather's moving through the Midwest, we've got snow situations, snow concerns sitting around here in the Illinois, Indianapolis market. So Indianapolis is showing up in the weighted rejection index as one of those markets that does have a little bit more volatility right now. So do make sure that you check on any freight that's coming out of that market over the next day or so. And then we've got our Milwaukee market, which is actually the leader or the second most volatile market in the country in terms of the weighted rejection index. Again, increasing rejection rates in combination with market volume overall. Our darkest blue market in the United States today. Again, we're going to have some weather hitting the East Coast here over the next little bit, but Milwaukee should be in the clear over the next little bit. So I would start to pay attention a little bit more to some of these markets moving east in terms of overall capacity. So let's dive on into that Milwaukee market being our biggest mover of the week. And strangely enough, what's moving a lot of the volatility in this market are reefer rejection rates. Van is taking a shot up right here. That's the blue line that you see, jumping up from its bottoming out down there below 2.5% all the way up to 3.49% in the last 2 days or so. So there is a pretty legitimate increase, but it's not a significant amount of rejections. If you look at the historical trend here, it's way below where it's been most of the year. Now, reefer rejections, they are trending higher. If you can follow this over the long run, reefer rejection rates are actually driving a lot of that market volatility. So carriers, especially reefer carriers, watch out for the Milwaukee market today, and that'll do it for your carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
New truck orders. What is the latest trend?
Luke bringing you another broker update, and today we're going to focus on areas of growth as we really start to push into this new year. So a couple of things we're going to look at. We got the chart behind us here. We've got the dry van tender rejection and volume levels here in the United States. So in blue, you're looking at the dry van volume level changes yearly. So you see that 1% all the way over there on the right side of the screen. That is going to be a 1% increase in volume levels, or 1% more loads that are moving for dry vans from this time last year. So that's a pretty good sign, but it's pretty level, not a significant change. But the point is there are more loads to move this time than there was this time last year for dry van freight. Now, what's interesting is this green line. Those are your tender rejections, and again, same thing, we're looking at the yearly change here. So you'll notice that minus 30%, meaning tender rejections are down 30% from this time last year. That's a good sign for brokers, because this is an opportunity for you to understand that there is more dry van freight out there to move for you. Shippers have enough of it compared to this time last year, but rates are down. That's a great opportunity to buy market share for dry van loads. We're going to go ahead and take a look at the same thing for reefer as well. Now, this is really interesting. Blue line here is now reefer change. So you see that 5% over there on the right side of your screen highlighted in red. That is the percent change from this time last year for reefer volume levels, meaning reefer volume levels have increased by 5% compared to this time last year. That's 5 times larger than the dry van increase. So you'll probably see a lot of that. There's a lot of freeze protect going on right now. We'll see if that level maintains. But what's really interesting is that orange line is the tender rejections, which have decreased by 47% from this time last year, meaning rates are down by a massive level. So there's a great opportunity to buy significant market share right now if you're a broker. Keep your bids low, keep your rates low. There's plenty of market share to buy, and then eventually when rates do pick back up, you'll have that volume level to carry you through and make a lot of money. So we're going to dive in here too just a little bit. Before we do, we're going to look at the Laredo market. So Laredo is a perfect example of this. We're going to take a look at the dry van freight out of there. So currently the index level is sitting at about 41. So a small increase so far this year over the last couple of weeks and month and a half, seeing a slow, steady increase. So that's a good sign for moving dry van freight out of Laredo. This orange line here is the rejection. So while pretty level, we're sitting at about 4.2%. That's actually a little bit below the national average right now. So volume levels are continuing to slowly rise, while tender rejections are remaining level or even slightly suppressed. So great opportunity. If you're moving freight out of Laredo, there's a good opportunity to continue to increase your market share there while pushing carrier rates down to increase your margins. Now, one more thing too, we're going to continue to look at Laredo again. This time we're going to look on the yearly change for both of those data sets. So the blue line here, that is the volume level change from this time last year. So you see 67% over there, all the way on the right side of your screen, highlighted in green. That is the change, or in this case, growth from this time last year for dry van volume out of Laredo. Meaning we're seeing a 67% increase in volume levels out of Laredo. Massive increase. While tender rejections there, that green line is sitting down over almost 40%. 40% decline in tender rejections from this time last year. And again, great opportunity here. The market itself is growing in terms of volume levels, but tender rejections are down, which means rates are down. Perfect opportunity to go buy some market share. So I'm Luke. That'll do it for your broker update, and have a fantastic Wednesday.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your shipper update. I'm here with Mike Baudendistel. Mike, we're talking trucking new orders. What's the latest?
So the latest is yesterday ACT put out their orders for January last night. It came in at 17,700 units. That's really not very many. I mean, it was up sequentially from December. It was also up about 10% year over year. It was the first year over year increase since October 2018. But as you can see, this is really, there were way too many orders in this time frame, and so really that it also took place back in this time frame as well. This is a 5-year chart, so there were too many trucks built in both 2014 and 2015, and then again in 2018 and 2019. So really 4 of the last 6 years there was just a surge in orders well ahead of the replacement demand for those trucks, and so now we're getting into a situation where there are too many trucks and demand is somewhat depressed. So that 17,000 number, yes, it was up. I think it was up from a very low level, and it's still below the replacement demand. Here we have in the green line is dry van spot rates, and you can see how closely those tend to lead new orders. And so even if those come up a little bit, that's going to be helpful for new orders. But I think the main issue is there was too much building in 4 of the past 6 years. And so the past in the past year there were one of the worst years for truck orders in several years, and that caused a decline in the backlogs. The backlogs are now close to being where they need to be. It's about a 6-month backlog. If you think about 120,000 units in backlog, still the manufacturers are going to produce about 100,000 fewer units this year than last year, going from about 340 to about 240. So companies that are supplying them components are going to have a down year. But if you're a shipper, you got to think, well, there's lots of capacity out there, particularly on the equipment side.
Gotcha. Excellent.
And this next chart is a chart of used truck prices, and I think this supports some of what I just said. I mean, really, the used truck prices influences the net amount that a new truck buyer is going to have to bring to the market. And you see down here, the used truck prices just under $35,000 for a 5-year-old Class 8 truck. Those are at low levels. You look, okay, when was the last time it was that low? All the way back here in 2011.
Right.
So it's been a while, and you sort of compare that to a year ago, and a year ago it was up at $45,000. So you'd have to bring another $10,000 to the table to get that new truck. Versus 2015, it was up at $55,000. You have to bring an extra $20,000 to the table. So
right.
I really think that's going to inhibit new truck orders, which over time can help the trucking industry. But for right now, that low number is indicative of too many used trucks in the field.
Gotcha. And what do we have here?
So here, shifting gears, this is just more on the shipper side. We've talked a lot about the shift from manufacturing in China to manufacturing in Southeast Asia.
Right.
And we're just sort of contextualizing this with a couple of different charts. The first one is the maritime import shipments, Vietnam to United States in blue, China to the US in green. You see Vietnam outperforming China, and at the right there pretty handily, up 32 versus -2.
Right.
So we are seeing that shift, carriers are going to want to position more equipment to the east. Shippers have to be mindful of that as well, but you also have to be mindful of sort of the absolute numbers. And this is the same chart, just in absolute terms. This is China up here. This is Vietnam, and you just see how much bigger the China market is for U.S. consumption. It's about 7 times the size of Vietnam. So the transcontinental intermodal and trucking networks from the eastbound to LA, that's not going away. That's still going to be the biggest source of imports in the United States.
Excellent, Mike. Insightful as always. Thank you so much for that update, and thank you so much for tuning in for this edition of FreightWaves Now. That's going to do it for our show. The content doesn't stop here. We're always posting around the posting around the clock. So check out all of our favorite social media platforms to see what we're doing there. Also check out our FreightWaves social media platform on our FreightWaves TV app for all your favorite streaming networks as well. Thank you so much for tuning in, and we'll see you on the next episode.